Good morning, everyone. Welcome to my channels. Um, Today, I want to talk to you guys about how to trade option with a cold calls. So, this strategy is perfect for the people that who want to earn some income, but they don't want to stare in the chart and look in the chart all day long and don't want to spend a lot of time on trading. So with this strategy, you only like spend like 5 minutes and under. That's in my opinion. So before we're gonna go to everything, I would let you guys study the basic. What's option in finance is, the key term that you need to know, and what do you need to be able to start and make income with this strategy. Let's go. Understanding options, what you need to know. What are options in finance? Options are financial derivatives that give the buyer the right but not the obligation to buy or sell an underlying asset at a specific price within a certain time frame. What basic knowledge do I need to what the basic knowledge do I need to start understanding option? So you should understand the concepts of stocks, how markets work, and the basic principles of investing. Additionally, learning how options contracts function, including terms like strike price, expiration date, and premium is essential. Don't worry, we're gonna go to the key term and the meaning and some of example for you. Why is it important to understand how options work? Understand options help you make informed investment decisions, manage risk effectively, and explore additional strategies to enhance your portfolio. How can I learn the basic of option trading? You can start with educational resource like books, online course, webinar, and practicing with a similar trading platform to build your understanding before investing real money. I highly recommend that you search and you seek the education first, or find the mentors or the coach that will be able to teach you the right way before you trade. And practicing with trading, paper trade, that means trading without real money before you put the real money in. Let's see. Next, key term for option and cover call. I want to go to each that key term word that is important, an option that you definitely need to know, and some example. So strike price. The strike price is the price at which the stock can be bought if the call option buyer choose to exercise the option. For example, if you pick your strike price at $50 for certain date, for example, in this example, I would say like you pick the strike price $50 expiration date on May 8th, and then by the May 8th, the market price is go above $50 your strike price, so your stock will get called away. So that means you have to sell your stock. Expiration date, the last date the option is valid after this date. Option expire is become worthless if not exercised. So with option, you can't just pick the strike price and then your expiration date is forever. You have to pick the expiration date either a week, a month, a years. So premium, the money you receive upfront for selling the call option, this is your immediate income, yours to keep whether the option is exercised or not. This I want to say the quick example about it is like, for example, if I decide to do some cover call today for SoFi for 10 contract, and my broker showed me that 10 contract I will earn about $370. So when I execute my trade that day, for example, if I execute a trade on Monday, the money will deposit to my broker account right away, $370, and I can do, budget and use that money right away. And at the same time, you have to manage it by checking your observe your option regularly. So monitor them, and then of course it's going to be more about advanced strategy, that what you have to do to maintain that. And also I talk about that in my book and in my course that I'm going to be coaching you. So delta is a measure of how much the option price changed when the stock price changed when the stock changed by $1. So delta range from 0 to 1 for call option. A delta of 0.30 means the option price change about 0.30 for every dollar move in the stock. And for the tip, in my experience, to be safe, if you put delta between 0.020 to 0.25, that usually my share will my stock will not get called away. That would be in the safe side. So the rule of thumb, what I'm trying to say, the rule of thumb, you want to pick the delta for the strike price below 0.30. What do you need to trade option cover call? So what do you need to be able to starting to execute a trade? So again, I am the big fan of the education. Education have to come first. Education about how option work. If you don't know how, you can find mentor and coach to help you. That's where you can be successful and not lose your investment. You need at least 100 shares of the stock. So you want to pick the right stock that you want to do the option. Not all the stock is give you certain premium. So again, I talk about this in my book and my coaching session. Set up your broker account. So you have to have a broker's account to be able to trade and execute your trade weekly, monthly, or timeline that you design. So with option, you can decide like you want to do one times a week, one times a month, every day, or one times a year. So, but for me, I prefer to do weekly. So when I do the math, weekly option is kind of make more sense to me. And of course, the final state of why we do all this trade option cover call, so you can collect the premium and cash flow from what you do with this strategy. So I am here. Like I say, I only can tell you about the basic stuff. I love to coach you how to do the option cover call. And you also can visit me at Wisdom World Wide Web, www.wisdomtrades.com. And I also feature in Fiverr. You can find me on Fiverr and schedule the call with me that way. I literally want you guys to succeed in this. And so But like I say, we can do 15-minute phone call together, see like we both is a good match. And if you want to pursue further, and we can start to learn this and teach you to become efficient with this cover call. And I believe in you, and I know you can do this. Thank you, everyone. Peace.